The stock market is one of the largest wealth creators in the world, and thanks to technology leveling the playing field, anyone can invest and see the same percentage returns as Jeff Bezos, Warren Buffett, and even Bill Gates. Of course, they have more dollars invested, but if you own just one share or even a fraction of a share, thanks to technology, of Amazon, Berkshire Hathaway, or Microsoft, you'll be up or down by the same percentage as those other investors. You can become a co-owner in some of the world's best businesses. This is just one of the reasons why I invest in stocks. And I'm about to cover a few more powerful reasons. Over the last 10 years, I've gained a much deeper understanding of stocks and the financial market. Now, I'm sharing my best insight for free. So I hope that's worth a like on this video. It only takes a second to tap that like button down below, and it really means a great deal to me, as well as YouTube's search algorithm, so other people can find these ideas. Also, while you're down there, I'd really appreciate it if you tap the subscribe button as well. As for my background, this will be quick, but it's useful to know. I double majored in finance and accounting. Then on top of that, I went on to complete one of the hardest exam series in the world, the CFA exams. That involved 3 6-hour exams, and it covered over 6,000 pages of core study material. I've slogged through all of that to acquire the, I guess you could say, book smarts. And I know it's a continuous journey. I still have a lot more to learn. But along the way, I've also really focused on acquiring the so-called street smarts. I've traded stocks, bonds, commodities, options, and even cryptocurrencies. In one project, I sent out close to $500,000 worth of Bitcoin. And to be honest, tension was a little high with that one. There aren't as many safeguards in place for those transactions. I'm mentioning this to show you that the financial world is dense and ever expanding. Although you don't really need all that. You don't need to know the difference between bond convexity or bond duration. There are a few simple rules you can use to increase your long-term returns while minimizing risk. This could easily mean the difference of $100,000 or even $1 million plus in your portfolio over your lifetime. Over the years, many brilliant friends have reached out asking for investing advice. Biosystem engineers, nuclear engineers, lawyers, doctors, etc. But all too often, I see them stuck in analysis paralysis when it comes to investing. They don't know where to start and often get caught up in marketing hype. So this video is partially for them as well. As I just kind of alluded to, one of the biggest issues I see is unrealistic expectations. We all have those friends or coworkers who brag about their winning stocks being up 200–300%. They often have hot stock tips as well. A lot of freshly minted Robinhood traders are out there, but please take a lot of those winning stories and some of that advice with a grain of salt. We're not as likely to hear about their losing positions. This can warp reality. And when I hear a few Uber drivers telling me what to invest in or the same things to invest in, it's usually a better time to do the opposite. If you throw all of your money into just one company, there's always the chance that it could go belly up or bankrupt. So in response to the approach, in that approach of concentrating risk, there's the proverbial don't put all of your eggs in one basket. There are low-cost funds that give you broad exposure to hundreds of companies. For example, the Vanguard S&P 500 ETF, ticker symbol VOO, its expense ratio comes in at an extremely low 0.03%. These types of fees have come down astronomically in the last few decades. On top of these lower management costs, most brokerages don't charge any trading fees either. Now, when looking at the growth potential side, the S&P 500 has returned roughly 8 to 10% annually over most longer time frames. And to see the power of your investment compounding over many years, Let's use that 10% bound, the higher bound of 10%, and a one-time investment of $10,000. In 10 years, that would turn into close to $26,000. Compounding at 10% over 20 years, it turned into just over $67,000. And if you go out to 30 years, you really see the power of that exponential growth. It would turn into $174,000. Now, this might seem far out, but time flies, and a little delayed gratification can really go a long way. If you don't plan on tapping into your retirement savings for a few decades, stocks are one of the best places to invest your money. Historically, they have higher returns than most other asset classes, such as bonds and real estate. I've even dedicated another video as to why I invest in stocks instead of real estate. Also, quick caveat there, that excludes buying a home that I would live in down the road. Now, I do want to be clear though that stocks have been better long term. In the short term, 1, 3, or even 5 years, the stock market could be down. So if you know you're going to need the money for some upcoming expense like a home down payment, I'd advise against investing in stocks. They're too volatile in the short term. And on top of that, as always, it's good to have a hefty emergency fund saved up with good health insurances, etc., to prevent big costs from popping up. Stocks in the short term are really a roller coaster. Once invested, it's not fun to watch a 30% pullback in my portfolio. It hurts. It doesn't feel good to watch that much money, paper losses, because they're not actually sold position and realized. Because over the long run, the US economy continues to push to new highs, and that's really why I want to own a piece of it. On top of that, timing the market in the short term is really a fool's game. The world's best investors cannot consistently do it well. So one of the best approaches for intelligent investing is to set up recurring times to invest. Some go with semi-annually, quarterly, monthly, or even with every paycheck. This systematic approach really helps prevent the negative impacts of trading on emotion. You'll buy in at some higher valuations, of course, but you'll also get in at some lower points as well. And this can help balance out your average cost of entry. It also helps prevent keeping too much cash on the sidelines, or kind of the emotional side of trading. This has been one of my biggest mistakes. While waiting for pullbacks, I've missed out on some big run-ups. And the cash on the sidelines has earned really little to nothing in interest over that time. So the big takeaway on this point here is invest at recurring times and stay the course. Now, to recap my big first point on why I invest in stocks, just quickly, and then on to 2 other really powerful points. You can become a co-owner in some of the world's best businesses. That's right alongside Elon Musk, Mark Zuckerberg, and many others. You can claim a stake in the growing economy. And that's even more important going forward as there's increasing wealth concentration. Now, for my last 2 big reasons as to why I invest in stocks, up first, they're one of the lowest cost and purest forms of passive income you can find. Unlike real estate, you don't have to worry about closing costs, finding tenants, ongoing maintenance, property taxes, insurance, legal fees, etc. When you buy a stock, you own a piece of that business and you do not have to worry about the daily operations or any of the aspects of running that business. And on top of that, you can set up a steady stream of income by buying into dividend stocks or ETFs. That's personally one of my favorite strategies, buying dividend stocks. Now, the other big benefit is that the long-term capital gains on stocks are taxed at a lower rate. Regular income from working tops out at about 37% tax rate. But if you hold on to your investment for more than a year, that taxes on that top out at 20%. That's a huge plus for saving and investing for the long term. And if you're holding it in a tax-advantaged account, your returns can grow tax-free. There you have it. These are the biggest reasons I gravitate towards investing in stocks. There are many other great benefits to owning stocks as well. And I've covered a few of those in the past on this YouTube channel, but I have more ideas to share going forward. So hopefully you'll stick around by just tapping that subscribe button. And if you like this video, it really means a lot to me if you tap the like button as well. And as always, please let me know if you have any comments or questions down below.